Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Tuesday. Hopefully everybody's having a GGD, a great green day in the market. You know I always wish the best for my viewers and subscribers. First off, I want to say sorry. I know I said I was going to be back and then I took a couple of days off. We did have a family emergency, so apologize for that, but I will be recording for the rest of the week. I also have a bunch of other videos planned and pre-recorded, so I'm super excited about those as well. So guys, let's take a look at the overall portfolio and what's happening today in the market. So today we are right around $50,700, down about 780 bucks or down 1% today. So it is a bit of a red day for my portfolio. But for the week, we are down $748, down about 1.5%. So for the week and the day, we are about the same. Next, for the month, we are down $225, down about 0.5%. 3 month mark, we're down $429, down about 1%. And then year to date, we are down $15. So we're about break even for the year. Then for the 1 year mark, we are up $495 or up 1%. So for the year mark, we are pretty much break even. Then all time, since I started investing, I'm up $15,175.35, up around 43% overall. So guys, keep in mind, this is a very long-term portfolio. So the year, the week, the month, the 3 month, even year to date, I really don't care. Over the past year, I'm up 1%. I know the overall market is probably down. When the market was down 20 to 22%, when it dropped, when there was a huge plummet in market value, I was actually positive by like 2% when the market was down like 18%. So over the year, I'm sure, the past couple of years, I know I've at least matched the market. I know last year I technically beat the market because it was a huge plummet. But overall, guys, keep in mind, I'm not really looking to, you know, pump up value in this portfolio. This is a income generating portfolio for me, so eventually I want to live off of these dividends. But price appreciation is great. It is cool to see how I stack against the market, but that is not the overall goal for my portfolio. So real quick, I'm gonna go ahead and get rid of a couple of these because I did a video on storage facility REITs. But let's jump into my actual portfolio, starting with a REIT. Realty income is down 77 cents today, or a little bit over 1%. For today, we are actually down, which is nice to see. 142 shares, around $9,300 of market value. Average cost is right around 67.15, so a really nice opportunity to buy here. Around 18.3% of the portfolio is in realty income. Today, we're only down $100. Total, we're down $255, down about 3% on realty income. Really nice buying opportunity. Anytime I could get it lower than my average cost, I would jump in, but I don't currently have the funds to be adding. Next, we have Coca-Cola, a recent ad. Shouldn't have sold it. I owned it a couple of years ago and I wanted to start building up a position again. I have 10 shares, $600 of market value. Average cost is right around $61 per share. So it is a little bit below my average cost here. So a buying opportunity. Not a huge one, but still an opportunity. 1.18 or about 1.2% of the portfolio is in Coca-Cola. Today, we are down 10 cents. Total, we are down about $7 or right around 1.2%. Then we've got Altria, 315 shares, around $15,000 of market value. Average cost is $47.34. 29.4% of the portfolio is in Altria. Today we are down to about $218. Total, we are up 12% or $12, up 0.8%. So overall, we're break even, so I could buy shares here because we're close to my average cost, but I wouldn't because it's not below my average cost. Next, we've got Apple, which I really hope drops because it ticks me off how much it's gone up. I bought it about a week and a half ago just because I wanted a second stock to pay me in the same set of months as AbbVie. And I've wanted to own Apple for a long time. I pick on my parents for not buying it. I love Apple products. I actually own a Samsung phone, but I had sentimental reasons for that. I would own an Apple if it wasn't outside of my sentimental reasoning. I would own an Apple. So right now, Apple's sitting at 100 and right around $150 a share, down $2 today. We only have one share. Like I said, just initiated the position, and I bought it with dividends, which is pretty cool. So Altria actually bought my share of Apple, right around 150 of market value, and right around 133 of value for my average cost. So right now, it's down, but not down far enough for me to really purchase it. 0.3% of the portfolio is in Apple. That is going to go way up when Apple drops, if Apple drops. Today we're down about $3. Total, we're up 17. We're up almost 13% on my one share. So this is one of those rare companies that it's kind of like AbbVie. So I wanted to buy a second set of another stock because AbbVie's so high, and then of course Apple goes up, which is fine, but it's annoying because I want it to go down because I feel like I'm trapped in AbbVie. But I love the capital being there because it's compounding very well. The dividend's growing at a consistent rate, and I like the business. But I wish Apple would drop a little bit so I could keep increasing that passive income. Next, we've got AbbVie, which the whole reason I bought Apple was because AbbVie was up so high. But we've got 95 shares, around $14,500 or $14,400 in value, excuse me. Average cost is $95.19. 28.5% of the portfolio is in AbbVie. Today we're up $45. Total we're up $5,000, up 60%, almost 60% on AbbVie. So I'm kind of stuck in this stock, and I don't mind it because I love the company. I did a lot of extensive research on it before I put my money in. I made a big bet on it, and at the time, I knew I'd just have to sit and wait for it to compound. And my theory or my investment paid off. So honestly, if I went ahead and just sat on the sidelines and waited for another AbbVie opportunity, I'd probably be a lot richer. Um, I did jump into like T. Rowe Price was kind of like that as well. And I think that has a lot of price appreciation opportunity, and the dividend growth is good as well. So I am always looking for market opportunities, but a lot of times that the opportunities that I see are not what Warren Buffett calls the perfect pitch. There are a lot of opportunities that I let slide through the strike zone just because they're not in my circle of competence. So AbbVie, I felt like after I did the research on the company, realized what products they had, what they'd be acquiring from the acquisition that they recently did a couple years back when I bought the stock. Um, I didn't feel like the price was was correct due to what they were buying. And I figured it'd take a couple years for the market to realize that they bought some really productive assets with that, or they acquired a lot of productive assets with that acquisition, and it paid off. So I'm happy about AbbVie. I'm going to keep my capital there. But, for somebody who's just buying it now, it's not a huge deal. But for me, I bought it around 80, and then I bought another little tranche around $95. So my capital's stuck here, but I'm happy it is because it's a great company. It's just if I want to add to this set of months when it comes to adding cash flow, I don't want to add at $150 when my average that's like $60 above my average cost. So I am up big on AbbVie. I do not plan on selling. So one of the people that I've studied and read a lot about. I've read like Dave Ramsey, a bunch of Warren Buffett books, Charlie Munger. Peter Lynch also says do not sell your winners. So this is definitely a winner in my portfolio, and I'm not planning on selling it at any time or any point. Next is T. Rowe Price, which I love that it's down. So 100 shares, market value is 11.3. Average price is 120, 168. So a nice buying opportunity here. 22% of the portfolio is in T. Rowe Price. Today, we're down $500. Total, we're down 800, down only 6%. Love them. Huge dividend growth rate. It was the last increase was pretty skimpy though, at like 4%, 2 to 4%. Usually they have big double-digit increases, but the market was having pretty violent fluctuations when they announce their increase. So I'll let it go. But again, just like I said about AbbVie, this is a great compounder. They have pretty consistent revenues, and even in market downturns, they have increased their dividends. So happy to keep my capital here and just let it compound. That is the end of the actual portfolio, but let's take a look now at the companies that I'm looking at, and I did add one. But first, to finish off the third set of months, which will be helping T. Rowe Price with that monthly payment, is Visa. I use Visa every day. It's my main card. I know it's the main card of millions of Americans, and they are the Coca-Cola of payment processing. So I will be buying them when the opportunity, when I feel like it is a good opportunity. Sitting at about 220 with $30 of upside on the stock price and a great dividend growth rate. I would consider buying it here. Should you think about buying Visa now, of course. Of course, that'd be the article. But I'm looking at getting it more around the $200 or below mark. So I want a bit more upside on my buy price like I got with AbbVie. Like I said, guys, I'm always looking, but I don't really want to add any more dividend paying stocks after Visa. And the only way that I would change that, guys, is if an AT&T situation happened where, say, like Altria cuts its dividend, or Coke, or somebody, whoever's in the portfolio, whatever company's in the portfolio, if they have a major dividend cut, and I don't think that the business is going to overall benefit immensely from that cut, I'm going to sell the company. So Visa is going to be the one to clear out, or to finish out the companies that are paying me dividends. Next is Berkshire Hathaway. Love them. I want to get them at about $270 a share, maybe even like 280-ish. So they have a bit to drop for me to buy. They own Geico, Dairy Queen. The real reason I want to buy them, See's Candy, because I love See's Candy. But I love Warren Buffett, love Berkshire Hathaway, love Charlie Munger, love their business practices, love their subsidiaries. I like their decentralization business, and how they operate overall. And I think that a few of the businesses, especially the insurance portion of the business, uh, the way that they use float is genius, and it is a compounding machine. I love that they are able to use the free money that they get from the insurance premiums to buy and invest in quality businesses. Currently, Apple is their biggest position, and that was a huge jump for Buffett, considering it was a tech company, but he sees it as a consumer staples play, and I do as well. So happy about Berkshire's recent investment decisions, and just overall, they're becoming a little bit more open to arbitrage, how he used to be when he was younger, with that Activision Blizzard possibly getting overtaken by Microsoft. So there's just been, I've followed the company for a number of years and love them. I've been to a Berkshire meeting. It is my annual like vacation. So definitely owning Berkshire Hathaway. But just like I said with Visa, I want to own it at the right price for me. And like I said, I want it around 270 to 280. Then this is one that I really do like. I've looked at Meta and I've looked at Google a lot. I just love the business, the search engine, Google AdSense, Pixel, and just overall, they are insanely profitable. Love their search engine. I use it every day. Everybody pretty much does. It's one of those like monopoly companies that I just want to own. So, um, I know it is not a dividend paying stock just like Berkshire, but when it comes to advertising and just YouTube, Google AdSense, all that, I've done a lot of research on their business. I do feel like they are a company that's going to be here for the next 5, 10, 20 years. I'm not worried about it. And it's going to be what closes out the portfolio. So I'm going to be finishing out with Visa because I use it every day. Love the payment processing. Think that they are a phenomenally run business with stellar profit margins and reliable dividend growth, as well as Berkshire being an insurance premium float generator and compounding machine. And then Google, I think that they have one of the best business models in the world, and they have a lot of free cash to keep generating profits and doing a lot of research and development into new products. So for that reason, those are the three that I'm going to be adding to the portfolio, but adding them at the right prices. With all that being said, guys, thank you so much for watching. Remember to hit the subscribe button on my channel, That Dividend Guy, and let me know down in the comments how long you guys have been investing and what your favorite stock is in the portfolio. Thank you guys so much for watching, and I'll see you guys tomorrow with another Robinhood portfolio update. Take care, guys.